Straight session of gains. Are we starting to get a bit of confidence that we can maintain the momentum?
Well, that was a key question this week, whether we were going to see that short covering rally turn into some positive sentiment. We're off to a good start with a gain of 0.9%. It was on very weak volumes, only $4 billion being traded, and we did see China in the red, down by 0.1% after coming back from a week-long break. Last week we broke the 50-day moving average. Now it looks like we're travelling towards that 100-day moving average, so 4,341 points would be the resistance level. It's interesting looking at that level as well, because if we have a look at the past two bear market rallies on the Australian share market, you can see they both targeted 4,340 to 4,350 points. So that would be a key resistance level on the market. And our market really being driven out once again by headlines out of Europe. Talk that Merkel and Sarkozy coming up with this crisis plan by the end of the month to help the European banks, help the euro up. And in fact, if we have a look at the euro, it spiked higher in the last half an hour of trade. So our closing auction was an extremely good one. The energy sector outperformed. We saw Woodside up by 1.3%, Santos up by 2.6%, and the uranium miners just absolutely rocketing away. But in terms of economic data, the ANZ job ads down for the third consecutive month, so down by 2.1%, and we've got the job numbers out here in Australia on Thursday.
I suppose, Julia, then, in terms of the technical levels, would you expect us to continue to move high? I mean, are the charts suggesting we're starting to see moves higher, or can we head back below that 4,000 mark?
I don't think we're going to go up in a straight line, but we do find that during bear market rallies, it does tend to be a very short, sharp move, as we are seeing now. So a very quick move to 4,340 points. And if we break that cleanly, stay above it for at least 3 sessions, that could be a positive signal that perhaps the market is at a turning point. Of course, the market's still very concerned about what's happening in terms of the European situation. So that's still going to be driving a lot of the moves and sentiment on the Australian market. As Kieran mentioned, fundamentals on a lot of these stocks, not only on the Australian market but around the world, looking very attractive. But unfortunately, it is worries about systemic risk coming out of Europe, which is putting a bit of a dampener on in terms of sentiment. In terms of Europe, this week's going to be important because we'll be watching Slovakia on Tuesday, voting for that European Financial Stability Facility. So that's going to be a crucial one. And the US is going to be interesting on Tuesday because it does look like currency wars with China maybe heating up, and we do see that Senate vote on possible tariffs on Chinese goods if they continue to, what the US says, manipulate the currency.
The debate?
I mean, we've seen a lot of interest bubbling away on the M&A front for the last 12 months. And if we have a look at Guangdong, it was looking at a takeover of Extract through its Kalahari holding of 43% earlier on in the year. And if we have a look at Extract Resources, this is the share price over the last 2 years. And you can see the share price peaking at $10.80 when talk of that takeover really hit the market. So that would be an increase of more than 20% from where Extract traded today at the last traded price, despite that 10.3% move up or 10.2% move up that we saw from Extract. And if you have a look at Extract's major resource, the South Rossing project, it's very near where Rio Tinto is, so it's not surprising to see Rio Tinto holding a 14% in Extract as well. But as Kieran mentioned, I mean, Paladin, you just look at its resource, a fantastic resource. We've seen the share price being absolutely smashed because of the uranium oxide price, which has fallen around about 35% from the peaks this year. And I guess the market really eyeing Paladin as the next potential takeover target, up by 10.3% today. We've already seen Bannerman being targeted by Hanlong, so with Hanlong making a bid for Sundance, I guess the market also watching Bannerman very closely.
Obviously, uranium are one of the big focuses today, but we're almost out of time. But I wanted to get, Julia, your thoughts on Fairfax. Obviously, the regional radio assets had been on the chopping block. They found a buyer. Looks like the agreements are all good to go, except not telling anyone as yet what the price is.
They haven't mentioned the price, which is a worrying part of this announcement. And I guess if we have a look at Fairfax, it has been under quite a bit of pressure because its advertising revenues have been under pressure. We've seen massive restructure for this business. Redundancies come through. They put their radio assets on the chopping block 5 months ago, and they've managed to sell regional radio assets. So that's 5 radio stations in South Australia and 3 in Queensland. Now, they're big radio stations stocks in Sydney 2UE and Melbourne 3AW still on sale, so looking for a buyer there. But Fairfax did indicate that they want to use this to really pay down their balance sheets, to deleverage, pay down their debt. So if we have a look at Fairfax, based on their target 70% payout ratio, still has a yield of around about that 7% mark, so looking attractive there. But the shares ending quite flat today. We know it's a difficult environment in trying to secure revenue from advertisers, and also the structural changes, the move towards digital in this area as well.